The stock market crash of 2021, we're going to be talking about Bitcoin, gold, a little bit of Tesla thrown in there, and we're going to be talking about the US debt cycle, which is long overdue for a correction. So we have stocks hitting their all-time highs, and it's just getting higher from here on out. And we have Bitcoin that's getting higher as well. And we have gold just not really doing too much. It's going a little higher, yeah, sure, but not as much as we liked it to see or expected to see, of course. And we have Tesla that is just going to the moon. So a large percentage of the population right now are flocking to assets such as stocks, gold, Bitcoin, real estate, and anything they can get their hands on to avoid this upcoming inflation. And because the velocity of money is so high and we have all this money sloshing around, changing hands and going all around the system because of these stimulus checks. And it's just insane right now. So we have a debt bubble, we have a stock bubble, we have a Bitcoin bubble. Everything is in a bubble. Plus we have the long-term debt cycle that is long overdue. So while many people around the world try to escape their fiat currencies and throw them into hard-earning assets and financial assets in general, we're going to be going over historical data and charts to get a better understanding of what situation we're in right now and the direction we're going to in the future. So if you haven't already, make sure to like this video and subscribe. I really appreciate it. And make sure to stick around to the end of the video as we'll be going over how to better prepare yourself for this upcoming crash. So here we have the S&P 500 chart adjusted for inflation that goes all the way back to the 1930s. But before that, we have the Federal Reserve Act created in 1913, which created the Federal Reserve. And after the Federal Reserve was created, we had the Great Economic Depression, which was in 1933. And that was a great deleveraging event and great reset to restore the economy to a better one, right? So after 1933, the Emergency Banking Act was created. That way people had, restored confidence in the financial market and system. And that led us on to 1934, which passed the Gold Act, which is pretty important to understand as well, but I'm not going to go into that. So in 1971, we got off the gold standard. And what happened after that? We had another slight depression or recession here. And after that happened, we had a nice economic boom that just honestly never really stopped. And as you can see, as we don't have anything to back our currency, it is now essentially worthless. It's just faith in the currency as we see fit. And the Fed pretty much created this whole issue we are in today because we are living beyond our means. And I know no one wants to hear that, but that's the reality we are in today. And then we have the Great Reset right here. And now we are in this nice economic boom that has never really slowed down. And we're going to go into the debt load here just shortly. So before the pandemic hit, we were already at all-time highs with debt. And the consumer debt is honestly getting worse. And it's not really getting any better, unfortunately. And what that's causing is a massive debt load, not only for Americans in general, but for the U.S. government as well. So it'll be interesting to see in the next few years what happens, because this debt load cannot sustain, and we will need a great deleveraging situation, similar to the Great Depression as we saw before. So right here we have the gross domestic product of the U.S. It's at a little over 21 trillion. And it's growing at 2.3%. So US GDP growth has been at 2.3%, right? But look what we have here in 2008. Not that much of a drop in GDP growth, right? So if we go back to the pandemic, we had an amazing amount of a drop compared to the great financial reset. So it takes a long time for the economy to recover from that. You have all these stimulus checks and government spending to just cover up this gaping hole in the economy right here. Not only that, you had people not working, nothing being produced, and people just staying home, not spending and consuming, except for like Amazon and things like that. So it's really interesting to see how the economy is doing through all this. So here we have corporate business debt, and debt securities and loans and their liabilities. And you can just see a phenomenal amount of increase of corporate business debt. And it's just amassing an extreme amount. And this just needs to be corrected because this cannot sustain at all. See, as you can see in 2008 again, there wasn't that much of a deleveraging. So we are long overdue for the long-term debt cycle. And it's got to be coming soon. There's no other way to go around it. You can't paper over it. You can't fix it with the stimulus check. Here in this chart, we have securities held by the U.S. Treasury, and it is at all-time highs. Again, this is phenomenal levels we have never seen before. Pretty much the government is monetizing the debt any way they can, and this is a great example of that. And as you can see in 2008, it was actually a really short-term drop in the U.S. Treasury securities that the government owned. Now, in this short-term recession, it's just gone parabolic. So here we have the United States households' debt to GDP numbers. This goes all the way back to 1952 to 2020. And this is not including what's going on right now in the pandemic. This is pre-pandemic. I'm sure these numbers are a lot higher now. You can see in 2008, we hit an all-time high. What do you think is going to happen in 2021, 2022, 2023? It may be another all-time high debt to GDP numbers. So before the pandemic hit, we were at all-time lows of unemployment, around 3.5% as the government recorded. And after the pandemic hit, we went to numbers like 16% unemployment as they recorded. But how they record unemployment rate is not really too accurate, so it was more like 28-30% unemployment. And so that dropped down to about 14%, and then it dropped down to what is now around 6%, but it's more like 12 to 14% still. So there are currently over 100,000 businesses, including small businesses, that are permanently closing their doors because of this pandemic. And this may cause an issue to restart this economy and get it back to the way it was. And the stock market is not reflecting that whatsoever right now. And many people are out of jobs. Employment is still very high. And we may take a while to get back on track again, if we even do, because of these stimulus checks and incentive to stay home and not get a job. Now with Bitcoin at its all-time high around $50,000, it may see a correction here soon if the stock market does correct as well. And if the stock market doesn't correct very soon, well, we have a bigger problem. Now I understand Bitcoin is very misunderstood, and I understand all the upside arguments, but no one really talks about the downside arguments that much or that well, and I'm going to be making a new video of that. But just to give you a little idea here, the government may regulate Bitcoin if it's treated more as a currency and not as a asset similar to like gold or something like that. So you see these credit cards and these ATM machines, so it's treated more as a currency than as an asset right now, as far as I can see, other than people just piling into it, creating this bubble. So if Bitcoin stabilizes, it will be treated more as a currency, and that will lead to it maybe getting banned, but I doubt that. It'll just have regulation, and people probably won't want to own it as much as some do now. So with gold, it's not really at its all-time high necessarily, but it's pretty close to that. Even though it's at its all-time high, gold just really tracks inflation, and it's an insurance of your portfolio to keep your wealth, not really to gain profit. So honestly, gold is pretty cheap now, considering the inflation rate is more like 6 to 8%. I would consider buying up some gold now while it's cheap, before we get this deleveraging or Great Depression, when you may have wished you had some gold, or maybe a lot of gold. It just whatever you're comfortable with. So with gold, it's actually a great use to hedge against inflation, just like with real estate. So with real estate, you're paying down that mortgage with cheaper dollars over time due to inflation. So if you have an investment property, that's a very good use of your money, and you get some tax savings as well. So gold and hard assets like real estate, and you got also commodities as well, are some good investments to make right now. And this is not investment advice. I'm a YouTuber, and you can do whatever you want with your own money. So with Tesla and companies like Amazon, Lyft, and Uber, and things like that, and all these SPACs that are coming up to the market, you don't see this at the bottom of a market. You see this at the top of a market. And what Elon Musk and Bezos and all these companies have done, they've taken advantage of all these low interest rates and gotten these cheap loans to kickstart their businesses to go up to the moon, right? So what happens when they kick up interest rates, or we have this deleveraging event? Well, they're going to suffer big time, and some of them might even go bankrupt. I'm not saying Tesla or Amazon will go bankrupt, but they will definitely hurt from this, and they may not expand as fast as they were, or they may even unexpand. So that's something to watch out for. So those bubbles are in a huge bubble, and they might burst soon. So if we are to see the stock market crash, it's most likely to happen this summer, which is June, July, or August. And if that does not happen, it may happen in December, January, February, or March of next year. And if that does not happen, then we are in big trouble, because this problem is just getting worse and worse and worse, and we're just kicking this can down the road, and we are going to have to pay for it in the end. And if the stock market does not crash this year, is because of the stimulus checks, the economic spending, and they may even come up with UBI or some kind of welfare system we do not need and will actually hurt us in the long run, believe it or not. So if we do see that, that's probably why. And we may see a crash in about 3 to 4 years from now. So it's just kicking the can down the road and creating a bigger problem for us in the future. And this is not going to benefit anyone except maybe the rich, I guess, if you want to go that far. So I do believe we're at the top or end of the long-term debt cycle right now. But the problem here is the Federal Reserve and the U.S. government not really allowing it to happen, so we have a deleveraging event. And what that does is it puts us down the road of this economic burden of having this economic depression that we just haven't had yet. So when we do have it, it may be astronomical, because they are not letting it happen now as they should have in 2008. So Ray Dalio put together a 30-minute video about how the economic machine works. So I highly recommend you watch that video to get a better understanding of how the economy works and how the long-term debt cycle and deleveraging and inflation, deflation, how that all works, so you can better understand how this will affect you and your family and your wealth in the future. And everything in the video may not be correct or incorrect, but it'll give you a better understanding, because there's a lot that's left out of the video, and there's a lot of stuff that's left out of my video. So that's all I have for you today. If you enjoyed this video, like and subscribe and hit that notification bell. I post videos every Friday around 1 p.m. So make sure to tune into those. And I am Travis Jacobs, helping you be productive in building wealth, and I'll see you on the next video.